Well, the SGX is suggesting a bit of a pullback, but the big news that came over the weekend was about the pullback in the export duties that were levied in May 2022. In fact, CNBC-TV18's Tim C had given you a heads up in the final hour of trade on Friday, and a few hours later, we got the official, word coming in as well. But let's discuss that. We have an analyst who's joining in from Nuvama Wealth Institutional Equities, actually, Ashish Kejriwal. Hi, Ashish. Good morning. Good to have you on CNBC-TV18. You have not spoken to us in a while, but let's speak about the impact of this. Tell us straight up, who are the biggest beneficiaries of this? Because we understand that it will help volumes, but pricing is unlikely to move. Your take.
Yeah, Nigel, good morning. Thanks for having me on the show. Yes, you rightly pointed out that this event is more of a, you can say, confidence building rather than numbers upgrade. Reason being is that the duties which have been imposed in May 2022, the situation now has completely changed. And now the world market is not the same what it used to be. So as of now, if I'm looking at from the exports angle, it's still not possible to export HRC because export prices are much lower. That is, export prices are something like 13,000 rupees lower than if you're selling in the domestic market. So exports are not a viable option right now. The only benefit which happened is that this will help them to at least ease some pressure in selling in the domestic market. So that is the only positive thing. And unless until global prices recover, it's not possible for steel prices to increase in that fashion in the domestic market, because we already are at a premium to landed cost of imports. So the material which is arriving right now, we are at a premium of something like 3,000 rupees. And the material which is about to arrive in Jan, we are at a premium of 9,000 rupees. So it's not possible for them to increase prices. So this is more of a mid to long-term positive rather than short-term positive as such in steel.
Sure.
But yes, stainless steel is different. Stainless steel is the biggest beneficiary for that, because right now also if you are exporting stainless steel, it's positive for them. They can make money of it. So for me, for this duty withdrawal, Jindal Stainless will be the biggest beneficiary.
Okay, Jindal Stainless. But just coming back to the steel stocks, Ashish, as you mentioned, export prices are much lower, so exports are not a viable option right now. What is your view on how to approach the steel stocks itself, the Tata Steels of the world?
So, today's move could be different, but what we will suggest is one is to not go very, very aggressive in buying it, because global market is still not that where we can buy and increase our shareholding in that. Okay. So for steel stocks, except for Jindal Steel and Power and Jindal Stainless, we are having our hold rating on all. And in the short term, so unless until global prices recover or China reopening happening, that will really fructify. I think it's better to book some profit in some of the large names like Tata Steel, JSW Steel, and JSPL should remain a buy on that.
Okay, all right. So Ashish, just to do a quick recap, JSPL is a standout one from the ferrous space. You like JSL Stainless from the stainless steel space, which is a clear-cut beneficiary, and maybe booking out of the other ferrous names could be a prudent strategy. Are we getting that correct?
Yes, but depends on what kind of price increase happened today.
Yes.
So if the stock prices increases beyond 8-10%, then that's a right strategy.
Okay, all right. What about NMDC? That's another beneficiary, right? It seemed the street was sniffing that. The numbers were absolutely disappointing in the second quarter, but it has seen some buying. What would you do with NMDC? Because pellet prices are going to move up. Iron ore prices as well could see a bit of an uptrend. And the price cut they took a few days ago, that could get reversed. So how do you approach the stock at around 110 rupees?
So that's a fair possibility which you pointed out, Nigel. But one has to keep in mind that iron ore, which is above 58% Fe grade, our calculations suggest that still it's not possible to export.
Okay.
So that means the supply of 58% plus Fe content iron ore, that will continue in the market. And if that is continuing, that means supply is already there. So unless and until steel prices increases, there is a possibility that iron ore prices may not increase in the same fashion in which pellet prices have increased.
Okay. And on this...
our sense...
Sure. Sorry, no, I just wanted a view on the stock itself at this 100 rupee price, 111 thereabouts. How does the risk reward look?
So our fair value is 121 only,
okay,
and we are not changing that.
All right.
Because right now it's not possible for NMDC also to increase prices in a hurry. And our sense is that pellet prices, which has increased on Saturday by around 1,000 and 1,100 rupees, they will also pull it back sometimes
All
within
right.
this month.
All right. Thank you very much for joining us. Great speaking with you, and Ashish, and hope to